Hello, everyone, and welcome to the YouTube channel AMC Lawsuit and Justice. My name is Ethan, and today we're publishing video number 16 in the Daniel Meyer Transmittal Affidavit series. Video number 16 will cover the timeline from May 31st, 2022 through July 21st, 2022. In this video, we'll complete Exhibit 20, the Jeffrey Weinberg email, and then cover Exhibits 35 and 21. So let's begin. On May 31st, 2022, at 11:27 a.m., Kevin Connor drafted an email with the subject titled Forward AMC Preferred Issuance and CC'd Eddie Goldbach and John Merriweather and emailed Sean Goodman stating. Now, before we go over the email, Kevin Connor was our general counsel, and he stepped away, I think, February of this year. Eddie Goldbach was AMC's in-house attorney. John Merriweather is investor relations, and Sean Goodman is our CFO. So let's go straight to the source, to the exhibit. Now, this is the Daniel Meyer Transmittal Affidavit. You could download it by going to Google, doing a search for the keywords Daniel Meyer Transmittal Affidavit, May 4th, 2023. And I think 5 websites should publish it. Anyway, so let's go to the Jeffrey Weinberg email, which is Exhibit 20. So here's Exhibit 20. In video 15 part 2, we went over the Jeffrey Weinberg email, which is dated May 17th. And he concludes the email giving people notice that he's incorporating or attaching the latest ownership report based upon the 13F data. And if the email is drafted on May 17th. So you will see that on Kevin Connor's email, you will see an attachment, which is coming from Jeffrey Weinberg. It says Institutional Investor Ownership Report, AMC _ May 17th, 2022 through Excel. So basically, he's giving them the heads up, let's look over this data and figure something out. And what does he tell them? Let's go straight to it. And he says, Sean, seems like we should get this in front of Adam as discussed at the end of the call this morning. Should we do this on a standalone basis or in conjunction with an update call on CSE? Probably the latter, as it seems like we would do one or the other, but perhaps not both. Question then becomes, at what point do we want to let Citi know we're pondering another share authorization vote, including one that might displace the CSE? Since B. Riley has thoughts about a share authorization mechanic, I suspect Citi might as well. We'll give you a call at your convenience today to discuss. Let me know a good time. Thanks, Kevin. So let's go over this email. But before we do that, let's go over some key terms and let's go back a little in time. So I think video 4, we went over share authorization and we went over 2 exhibits, one from D.F. King and one from Broadridge. And we went over the May 4th, 2021 and July 29th, 2021 vote. And then we also watched Adam Aron being interviewed by Yahoo Finance, where he tells the reporter or the anchorwoman that these 2 votes were actually running favorably, but he pulled it. Now you will see later in future videos that in-house or internal AMC emails show that they were saying it was not running favorably, but Adam once again makes a misrepresentation. So what the email is saying with regards to share authorization is that they want to do another one of these, which is just to vote and allow shareholders to vote for more AMC common shares to be authorized. Option 2 is CSE, the acronym. It's Citi's rights offering option. That is the one we've been going over, or they were discussing it for over 9 months. And the initial time where Project Popcorn is conceived is November 3rd, 2021. And then we went over a couple PowerPoints, specifically through the rights offering and what if they offer certain NFTs. If you exercise X amount of rights, you could get different colors of NFTs. And then option number 3 is what we went over, the John Merriman email on video 15 part 2, where John Merriman from Riley Financial, which is our financial advisor as well, sent 3 prospectuses for 3 stocks, OPGN, AVGR, and AGRX. So that's the 3rd option. All right, so let's go back to the email again. So Sean says, seems like we should get this in front. Sorry, so Kevin Conner writes to Sean and says, seems like we should get this in front of Adam. And what does that mean to get in front of Adam? It's this information that they have about the institutional investor and their ownership, as discussed at the end of the call this morning. So mind you, this is 11:27. They had an earlier call that morning. Should we do this on a standalone basis or in conjunction with an update call on the CSE? Probably the latter, as it seems like we would do one or the other, but perhaps not both. So CSE is what we discussed, the rights offering through Citi. Question then becomes, at what point do we want to let Citi know we're pondering another share authorization, which is option 1, including one that might displace the CSE, which is option 2. Since B. Riley has thoughts about a share authorization mechanic, which is option 3, I suspect Citi might as well. We'll give you a call at your convenience today to discuss. Let me know a good time. Thanks, Kevin. Okay. And then paragraph 2 addresses that attached to Kevin Conner's email was an Excel sheet named Institutional Investor, which came from Jeffrey Weinberg. And they wanted to discuss that. What information and what was they showing was new investors, institutional investors, going to allow it to now pass the vote or not? I don't think it was just, we were not given that PDF file, the Excel sheet we were not given. So now we're going to jump a couple of weeks to June 15th of 2022. At 6:19 p.m., Aron tweeted out the following to AMC stockholders who have continuously demanded a share count with respect to how many AMC shares are out in circulation as opposed to outstanding. Once again, this tweet gives us lip service. So let's go to this tweet. And here it is, 6:19 p.m., June 15th, 2022. So inbound tweets ask over and over for a share count, in quotes. AMC has done a share count 6 times in the past year. We know of 516.8 million AMC shares. Some of you believe the count is much higher. As I've said before, we've seen no reliable info and so-called synthetic or fake shares. So then we put together some response tweets to Aron. So following Aron's June 15, 2022 tweet, hundreds of AMC shareholders expressed their frustrations through tweets highlighting Aron's abject failure to address the crucial question regarding the total number of AMC shares in circulation. Several shareholders conveyed their concerns and messages emphasizing this issue. If you recall, I think video 3, I addressed that Project Popcorn is conceived on January 27th, 2021. Does everybody remember what happened on that day? Please review that video. But anyway, on that day, Aron, without any rhyme or reason, asked for 500 million shares. Now, mind you, the stock was trading at $20 that day. So if we sold, if he did a shelf offering or SPO and offered it at 20, that means the shares that he was asking for were worth over, let's do the math, 500 times 20. Let's do it again. Hold on, let me pull out a calculator. So imagine, when he asked for 500 million shares, it was worth over $10 billion. Why ask for that amount of shares? That was double we already had 524 that we could authorize. No data was presented. And then the stock trade gapped up over 300%, traded over 1.2 billion shares. So let's continue. So his abject failure to address the crucial question regarding the total number of AMC shares in circulation. I would love to know how many shares were truly out in circulation on January 27th, 2021. Now, several shareholders conveyed their concerns and messages emphasizing this issue. Why have you not hired an attorney to look into counterfeit shares and short and distort techniques by hedge funds, along with the millions of other stock manipulation tactics going on? The time to pounce is now, before you lose the retail trust. Vote. Let the shareholders vote. So if we do a share count or not. Nobody knew Madoff was running a Ponzi scheme right up until he was caught. It would be interesting to know how you came to the conclusion. What investigation was done? Have you really even tried to sniff out the fake counterfeit shares? And then another person tweeted, so cold, I think it's time for you to stop saving face and protect your loyal investors. And then the following day, there was a meeting for stockholders. At the June 16, 2022 annual meeting of stockholders, AMC stockholders resoundingly rejected in a non-binding vote Aron's compensation package. So 52 million voted for, a little over 86 million voted against, 5.9 million abstained, and then there were broker non-votes. And once again, Sakoya Blackwood enters the picture on June 21st, 2022, and she began sending text messages to Aron from another voice IP number purporting to be a reporter from Vanity Fair. The Vanity Fair reporter referenced having seen texts and images. I was shown some images and I was wondering if you were available to speak. And I was also shown text conversations with the accompanying images. And my source claimed the woman was underage at the time of the initial affair. And for those who are wondering, where do we get this info? You could do a YouTube, Google or Yahoo search for Sakoya Blackwood sentencing memorandum, and then you can scroll down. You can get all the facts associated with the indictment and conviction, or the conviction of Sakoya Blackwood. All right, so let's skip a couple more days now. On June 24th of 2022, the United States Congress finally published the GameStop report. The January 2021 meme stock squeeze and turning off of the buy button, which occurred on January 28th, 2021, and the events prompted the U.S. House Committee of Financial Services to hold several hearings to investigate the circumstances and implications of these market events. The hearings sought to understand the reasons behind these actions and whether hedge funds and brokers disadvantage retail investors to save themselves. There was significant controversy over the decision by Robinhood and several other brokers to restrict trading in the volatile stocks at the peak of the market frenzy. Now, according to the congressional findings, there is evidence to suggest that Ken Griffin, the CEO of Citadel, lied during his testimony to Congress regarding the GameStop short squeeze. During the hearing, Representative Maxine Waters and others questioned Ken Griffin about whether Citadel had any role in the restrictions that Robinhood and other brokers put on retail investors. Ken Griffin responded, "Absolutely not. We had no role in Robinhood's decision to limit trading in GameStop or any other meme stocks. However, it was later discovered in internal messages between Robinhood and Citadel that this statement was factually inaccurate and Ken Griffin had in fact appeared to have perjured himself." All right, now we get to Exhibit 35. And what is Exhibit 35? This is the exhibit that shows when Project Popcorn shifts from a shareholder rights offering where there is zero dilution if stockholders exercise their rights to an ATM offering outright dilution. So let's go to Exhibit 35. On July 20th, 2022, Sean Goodman sent a memorandum to the AMC board and Aron concerning the preferred stock in APES. It details the proposal and notes for the first time that AMC planned to sell APES in an ATM offering. So let's go to Exhibit 35, which is on page 914 and 915. All right, so let's just go show you that's Exhibit 35. Exhibit 35 is on page 913. Let's scroll down. And here's the memorandum, July 20th, 2022, from Sean Goodman to AMC Board of Directors. What is it in reference to? AMC Preferred Equity Units. And here's the objective. The proposed transaction is intended to provide AMC with the ability to raise additional equity capital with the associated significant benefits of our balance sheet strength and strategic flexibility. AMC does not currently have any authorized common shares that could be issued to raise additional equity capital as an acquisition currency or as a component of a future debt exchange. AMC does however, have 50 million authorized preferred shares that are the basis of this proposed transaction structure. Now the summary. AMC will create preferred equity units representing fractional interest in AMC preferred shares. See mechanics section below for details. The preferred equity units will trade on the New York Stock Exchange under the ticker symbol APE, and each preferred equity unit will have essentially the same economic value and governance rights as an AMC common share. Each preferred equity unit will also be convertible into an AMC common share in the event that AMC has sufficient authorized common shares in the future. AMC will issue a dividend equal to one preferred equity unit per common share. This means that 517 million preferred equity units will be issued and tradable on the New York Stock Exchange APE after the dividend has been distributed. Because each preferred equity unit represents only a fractional interest in the AMC preferred share, a total of up to 5 billion preferred equity units can be issued. See mechanics sections below for details. In the future, preferred equity units can be used in the same way as ordinary share capital. The implications, AMC perspective. The most important implication is that AMC will have the ability to raise additional equity capital using preferred equity units through an at-the-market process or otherwise capital-raising transaction. Preferred equity units can also be used as currency for M&A or debt restructuring, including to satisfy deferred rent obligations. Implications. An investor owning one AMC share with a market value of say 15 will, after the dividend, own one AMC share and one AMC preferred equity unit with theoretical combined market value of 15. The economic impact for AMC shareholders is expected to be essentially the same as a share split. Shareholders will receive a dividend, something that many have been requesting. There is no immediate dilution for current shareholders, although there is the potential for future dilution to the extent that additional preferred equity units are issued in the future. Short sellers may be required to compensate lenders from who they have borrowed AMC common stock by providing the lenders with a preferred equity unit or economic equivalent for each share borrowed. Mechanics. Each preferred equity unit is structured to be equal to 1/100th of preferred share. AMC has 50 million authorized preferred shares, thus allowing a total of up to 5 billion preferred equity units to be issued. Note that the 4.5 billion preferred equity units would be available for issuance after the dividend has been released. Each preferred equity unit is convertible into a common share subject to the approval of shareholders to increase the authorized common share capital of AMC, that there are sufficient authorized common shares for the conversion, and B, there is sufficient remaining authorized common share capital after the conversion to allow AMC to continue to raise common equity capital in the future. The intention is that uninvested shares in AMC's EIP plan would vest together with a preferred equity unit for each share. Now, other considerations. We plan to announce the preferred equity unit dividend at the same time that second quarter earnings are announced on August 4th, 2022. There are no significant tax implications for AMC, and the transaction is expected to be tax-free to investors. We plan to offer investors an I Own Ape NFT associated with the launch of the preferred equity unit. We plan to raise additional capital or equity capital through an ATM offering of preferred equity units. The amount and timing will be determined based on the market conditions and strategic opportunities. We are ready to act quickly. Now they finally address index funds. This is key. Index funds that own AMC shares will likely be required to sell the preferred equity units. While this may put pressure on the value of the preferred equity units, lower index funds ownership also means less shares available for short sellers to borrow, and this could have an offsetting positive impact on the trading value of the preferred equity units. This is not factually true. Index funds, they knew, had to sell, and during the settlement hearing on June 29th and 30th of 2023, the gentleman, Mark Lebovich, who was arguing for the plaintiffs, made reference that 15% had to sell, meaning index funds, 15% of APE were forced to sell as a result of APE being launched because index funds cannot hold a derivative of the AMC common. So imagine, that equates to over 78 million shares were being sold off from day one. Do you understand how much selling pressure there was? Okay, so let's continue. All right, now we're going to address Exhibit 21. Now, mind you, that was July 20th, the memorandum. And now on July 21st, 2022, at 12:33 p.m., John Merriweather, once again, Investor Relations, he drafted an email with a subject titled City Questions PEU, which is Preferred Equity Units ATM, with Kevin Connor, Eddie Goldbach, and the email address to Sean Goodman stating. Now let's go straight to the exhibit. And this is, once again, here is the exhibit, Exhibit 21. Let's scroll down just to show you that's Exhibit 22. So this is the email, and it reads bottom up. So here's July 21st, 2022 at 12:33 p.m. John Meyer writes, he goes, gentlemen, Derek was former investment banker for Citi. He's now, I think, employed by Wells Fargo. So it's Derek Van Zant. He called after the call with a few logistical questions regarding the S3 and the ATM plans. And then there's something redacted. There has been some discussion about how many PEUs we should register, and 1 billion was discussed. Now, mind you, within that 1 billion, 517 would go for the quote-unquote dividend, and then the remainder, which is 483, for the ATM. Now, are we in agreement that the number is 1 billion? There's a sweet spot somewhere that doesn't raise the shareholders' ire about dilution, but also gives us the flexibility to raise the capital we want. I think we will get ire no matter what the number is. So does it make sense to get the ire out of all at once at 1 billion? So John Merriweather's July 21st, 2022 email depicts that AMC board was careful not to introduce an excessive number of apes initially, considering the potential backlash and resistance from retail stockholders regarding the strong dilution concerns. This calculated approach was designed to manipulate and convince stockholders to accept the poison apple that they were offered by their silverback, quote unquote silverback, Aron. Now, Sean Goodman contemporaneously replied to John Merriweather's email with Kevin Connor and Eddie Goldbach CC'd stating, let's just go straight to the exhibit. And here it is. So, mind you, that email went at 12:33. His response was 12:40 on July 21st. And he writes, thanks, John. I think 1 billion makes sense. Defer to the lawyers regarding the S3, Sean. So, mind you, do you guys see any exhibits attached, any financial explanation why a billion? Now they explain why 517 goes to the quote unquote dividend, and then there's 483 million left. Wow, what's the dilution factor on that one? And we've now seen the net result, what happened. And we've seen everything play out. So let's continue. All right, now we conclude with the last paragraph, 14. Like on January 27th, 2021, now that's when there was that special meeting and Aron made the same request for 500 million shares. No information was provided why or explanation why 500. And the same thing happens with the memorandum or Sean Goodman's email. On July 21st, 2022, response email notably lacked any attachments such as an Excel sheet or a document to indicate that any financial analysis was performed, providing support or clarification on the rationale behind registering the 1 billion shares. And that concludes today's video number 16. Stay tuned for video number 17.